This
Good
meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his boy Taylor from Life Goal Investments. How you doing, buddy?
Great. You've got me fired up. You brought up two topics today that just were like grinding on me, and then it been like it's perfect. It's perfect for viewing purposes because you just wind me up and let me go.
Yeah, I see a red button. Let's go push that red button. Let's see what happens when I push that red button. That was fun.
Oh gosh.
Well, I got
Wood and Tony Robbins. Yeah.
Yeah,
Go ahead.
Yeah. Well, we got to talk about Friday because you and I disagree, which is always fun for the audience. So we do agree that Friday CPI number will be important. I think that is fair to say.
No doubt. No doubt.
It will
overwhelmingly important. The most important one we've seen yet. So you give
we
the
agree.
comments. You got it.
Yeah. So I agree. I think this CPI print, there's really only three options, and we will get into it in a minute, is the most important economic number we have seen in months, because it could send the stock market up 10% next week. It could crash the market 10% or potentially send it sideways. But this number can move the market. Is that kind of a fair?
Yeah. I mean, we are so for further context, everyone and their brother knows right now that everything costs $1 million to buy, right? I mean, inflation is just rampant, something we haven't seen since the 80s, the 70s. It got a little higher than it is right now, but nonetheless, we haven't seen inflation in this country in decades. And so now we see it, and we potentially tick the top mark at 8.5%, that it came down to 8.3. And now does that trend continue downwards, which is my expectation, or does it revert course from there and move back up, which is your expectation?
Yeah. So let's talk about this. Because again, I think this moves the market. And as an investor myself, I'll be very clear. I wouldn't touch the market until Friday. If you're a trader and you want to play momentum, go nuts. Not my thing. But if I had cash on the sideline, which I do, I'm not putting nothing to work right now. I'm like, I'm going to wait for Friday morning because I don't know what's coming. But
you could be right, but you could also get your head cut off. You buy something that's speculative or something that's volatile, has a beta, which measures volatility more than the market. You could be down 20%. There's no doubt about it. It's a hot number right now. And that's not to say that the inflation number is going to be high. This is important.
Yeah. So let's play it out, because I do think there's three options. We'll start with yours. I have, I have a dozen friends who mainly are investors from traders and wealth managers and the like. And I would say overwhelmingly, the Wall Street folks are leaning towards inflation peak. Some of them are calling 8.1, 8.79. Generally speaking, all of you, at least all of my contacts, are on that side, which again makes me concerned because it almost feels wishful thinking, but we'll see. But again, let's just say CPI comes in at 7.9. Let's just say it does. Yep. I think the market's up 8, 9, 1,000. Again, we're talking S&P, Dow. I think it goes bananas.
Because what the market then perceives that as is the Fed can then not raise rates as quickly. So the Fed can back off the gas or the brake pedal, whichever one you want to call it. But the Fed is on this march higher to curb inflation right now. And what that will say then is, okay, what we're doing, what we've already done, is starting to play its role out. And therefore, you'll see it come back down and continue to come back down. And we don't have to raise rates as quickly.
Yeah. In my world, my language, not yours, let's just say it comes in again at 7.9. My belief
expectations 8.1 for context. That's consensus right now is 8.1.
Yeah.
So 7.9 is
so it comes in lower than that. And basically in my world, that means a pause in September is at least talked about. I don't think it changes June or July, although Kathy Wood is clearly saying, I think Kathy Wood's calling for a low number, see video 2, and possibly a change in July. That's what she's hoping for. But go back and watch that video. I don't want to go down that again. But generally speaking, 7.9, I think the Fed could theoretically talk about a quarter, which would be half as much as they're doing now, or even a zero quote pause in September. That's what I think. And I think the market would like that.
Yeah, I think that's very fair. I think that if we can get off this 50 handle per meeting, the market's going to be happy. Exactly. And I don't think that anything's going to change. Even if it comes at 7.9, like, let's be clear, 7.9 is really high. 7.9 is still really bad inflation. And we've talked a lot about inflation being a regressive tax where it hurts the lower end of the market, and the lower end of the market is not exclusively, but a huge driver of the economy. Because
Agreed.
again, when they're feeling flush, they go out and spend. If any additional dollar they have that's out there, they're going to spend it. And so the effect on the end consumer there on the bottom end is disproportionately weighted. And we to plug our Instagram, I guess, we just did a video that said the gallon of gas costs 1,000 times more for a poor person than a rich person. And it just kind of
I saw that.
through that.
You guys got to watch. You guys got to subscribe or whatever it's called. Follow Life Goal Investments.
Yeah,
on
no,
IG.
thank you. But I appreciate the conversation. But to your point, yes. I think that again, this is get back on topic. Sorry, the June, July 50 basis point movements.
Not happening.
They're done. They're done. They're just going to happen. Right.
Yeah.
And unless, something bad, a nuclear warhead gets shot off in Russia and something changes, like this exogenous events, we can't play those. But to your point, those two are going to play out. We are looking now at September. And I honestly think, and you'll disagree with this, I honestly think that even if it comes in hot, so maybe you want to, if it comes in at 8.3 or something like that, 8.4, 8.5, 8.6, somewhere up, I think that it's still 50-50. And it just raises the future expectations for more 50s to come.
Okay.
I think you probably think that it bumps to 75, right? Or no? I don't want to put words in your mouth.
Yeah, no, we'll get to that. So yeah, so I think if CPI comes in low, which is the first of three scenarios, it doesn't change June or July. It does put talk of cuts or pauses in September. That's what the market wants. The market will take off if they see that, because again, the market's always forward looking, and
I don't want to correct you if this is what you intended to say. I don't think it puts cuts on the table in September.
No.
Okay.
No.
Okay. Right.
25 or 0. I'm not talking a cut. Are you freaking kidding me? That's Kathy Wood talk. I'm not going there.
That word slipped out of your mouth. That's why I wanted to make sure we were clear.
I meant a cut from 50 to 25.
A cut from expectation. Got it.
Yeah. Okay. So
let's not get crazy.
Come on now. Whoa. So let's go to the other side. Let's say it comes in hot. Right. Anything above 8.3 is hot. And I'm calling 8.5.
Yep. Okay.
Let's say it got stupid at 8.7, just like we said, we got stupid at 7.9. We'll go to 8.7. I think again, June and July is set. And I think September, the Fed, the September will be 50. And I think you're right. I think they really start talking about 75 because they're like, well, these aren't big enough. And so for me, it comes in hot. We're going to get series of 50s, no doubt. And I think the Fed has to start talking about 75.
Yeah. So I will, if you're right, I will tell you where I was wrong. Where I did not see it playing out the way it has is oil is more persistent than what I thought it was. So I thought it was going to go to 120 and then just perpetually back down after the Ukraine-Russian war. The news was there. The news last week came out and was tough on the oil market. And it was, I'm not making any political comments.
No.
The fact that Europe is backing away from Russian oil, good, like love it. Hopefully this can play some pain out on the Russian side in order to get them to back off what they're doing there. But what they did was they said, we are going to take down 90% of our oil imports from Russia that come via ship. So they're going to move away from shipments of oil. Now, this is not to say that they're not going to take the oil via pipeline. They're going to work towards that. They're not there yet. But that news, and even before that, admittedly, I was wrong that oil started to tick up more than I thought it was. My thinking, and maybe this is my Kathy Woodism, if you will, which is scary, right? Because we beat her up because she deserves it. But my thinking is that the technology is there in order for us to access more oil. And again, not a political comment, but there are some political apprehensions to allow us to do that for the ecological, environmental is what I'm looking for. The environmental state of the world, et cetera, et cetera. But we do have the ability, if we were just to say, okay, turn the spigot on, bring down gas prices, like we do have the ability to do that. It's just, again, I was a little bit wrong there. So if we come in hot, that's where I was misplaced in my thinking.
Yeah, no, I
still stand on the side that I think it's going to come in lower. I think we are trending down, but if not, oil has been persistently hot.
Yeah. So then there's the final one. Let's just say it comes in flat, so it was 8.3. Let's say it comes 8.3, 8.2. I think that's generally flat. Maybe 8.2 is enough to call it a trend, but I don't know what the market does with that, because I think if it's flat, 50's got to stay on the table for September. That's
Yeah,
my thinking.
I, and this is like oversimplification 101.
Yeah.
But I think the number is not 8.3 to look at, it's 8.1. So if the market says 8.1's coming, higher than 8.1 is probably going to cause it to sell off some. Even if it's just 8.2 or 8.3, I think it probably sells off because it goes, okay, this is not quite as easy to fix as what we thought it was.
Yeah.
And so, I mean, yeah, inflation is just really, really tough. Like I have a buddy who owns multiple restaurants in New York City, and he sent me a message, and I should have put this on social media because it's such a real world experience of what he's seeing. He said, this is the make or break year for small businesses. It's the make or break. He said a lot of our input costs are up 100%, doubling. And he's like, you can pass on some cost because the consumer is relatively flush after what we saw over the last year. But he's like, you can't pass on a double. You can't. And he's like, so the profit margins get squeezed. And maybe I will post that on social media one of these days because it's just a screenshot. And I was just like, kind of just caused me to take a step back and say like, man, this is where the rubber really meets the road. I know the consumer struggles, but also the small business really struggles as well. And they're the ones that are really feeling it because they don't have the coffers of money that Walmart and Target have to sustain a downturn for a period of time. The small businesses, live on a day to day.
I agree. I'm sure you saw it. The last unemployment report, I think it was the ADP report specifically talked about businesses under 50 employees. Actually, we're losing headcount.
Yeah.
And
we talked about this before, but there's an NFIB, National Federation for Independent Businesses, I think is what it stands for. They are at the lowest level of confidence, lower level of confidence from small business owners than in 2008.
Yeah, that's amazing.
Like
that's nuts.
And I think because inflation is just so tangible. That's what it is.
Yeah, it's all their input costs. It's their employees. They're losing employees, their rents. I mean, I could not imagine being a small business, especially small business restaurant. Talk about.
Food costs, right?
Oh.
Food costs are just crazy. Yeah.
And then all the extra freaking nonsense for cleaning and all these other things you have to add on. That ain't free, right?
Right. But just to be clear, like, and I'm not telling you anything you don't know. Oil is such an integral part of everything we do. Plastic, rubbers, lubricants, all of it. They all have the backing. The base of it is oil. So clearly, oil at 120 or wherever we're at right now, it is just really stressful. Everything gets trucked. 70% of the goods get delivered by a truck.
Yeah.
Yep.
I have a couple
how about the disparity? Sorry, maybe you're going there. The disparity between diesel and gas prices.
Nuts. I have a couple of truckers on the
over
channel.
$1.
Yeah, it's crazy. Yeah.
What is their take? One
of the truckers sent me a note the other day that he has a 300-gallon tank, and he showed a picture. It was like $1,800 and some to fill up his tank. I'm like, Michael, it all gets passed on to someone.
Yeah. So I don't know the answer to this, but I would be curious to hear an expert talk about it. And I've looked around a little bit. It's not easy to find why diesel specifically is so much more expensive than gas. I mean, I imagine it's just all supply demand, right?
But it's probably somewhere in the refinery that they're turning this on for that. I don't know. I will ask and see if I can find it, but it's got to be it's got to be supply demand at the end of the day. Right.
It's over $1. It's over $1 in disparity on a gallon, which is crazy. It just hit me like headline shock one day. I was driving by. I'm like, why the heck is diesel so much more?
Yeah, exactly. Well, Taylor, it's been a fun week. I can't wait for Monday because I think one of us is going to be right. And then the other one will say, whoops, what happened?
Yep. We'll egg in our face. One of the two of us. That's okay. That's all
right. I try all the time. Hey, my crystal ball is just as broken as yours. We try to make good guesses every day. We try to be informed. Where do you want people to go to follow you?
Follow us at Life Goal Investments on Instagram is the best place. Putting out daily stuff there, not really product oriented at all, just general market stuff.
Just general helpful. And you have a Tony Robbins thing, which is a lot of fun to go look at. See video 1. Thanks, buddy.